Hello, Jim here. Last month I had one of my best months. Today I want to talk about the strategies I used and how I was able to earn some really good income. I'm going to talk about cash secured puts. I'm also going to talk about vertical put credit spreads, covered calls, and iron condors. And I'm also going to share with you how I did both with my dividends as well as my interest. So stay tuned. I think you're really going to enjoy what I have for you. Okay, let's jump right in. It's been an interesting week. The market has been up most of the week. I actually thought it was going to go down after the rate cut. But as usual, the market proves that it's very unpredictable. Do I think that's going to continue? I'm not so sure. So, as always, stay safe and be sure you're not taking too much risk out there. So, let's jump into the main discussion points. Now, I like to use four safe strategies. They're probably the most common strategies out there. I like covered calls. I've been doing them for many, many years. Then after that, cash secured puts, and then vertical put credit spreads, and then iron condors. And I primarily do those four trades. And a majority of them are vertical put credit spreads and covered calls. So why do I keep doing just those four strategies and don't jump into more complex strategies? It's because this works, and I prefer, not to take a huge amount of risk. I like to use what's called guardrails, or I like to use the word guardrails to be sure I stay safe, that I, don't take unnecessary risks. To me, I'm more of an investor than a options trader. I like to pick companies and see them grow and see them appreciate. And the premium for trading options is just literally extra icing on the cake. At least that's how I like to look at it. So by doing, or not by doing, but by adopting really good guardrails, you can kind of keep yourself safe, and it keeps you trading in a specific way. So if you're not using guardrails, I encourage you to set some up. Now, I share my guardrails with my community. They're typically in my planning worksheet that I'll share at the end of this video, where I'll share how I did for the month. I'll go over some of my trades, but not in a lot of detail. But you'll be able to see how well I do, for the premium for the month, for the dividends, and the interest. So be sure you stay until the end so you can get those kind of details. So, and it does really break down into quite a few different types of income streams. So even the premium from options, in my mind, is more than one income stream. I look at it as income from covered calls as well as income from puts. And then, when you add in dividends and then interest, especially if you're dealing with, fidelity and you're earning the really good rates on a swap account, meaning you can earn interest on your cash you're using for your puts, it can be a substantial amount of interest. So it's probably become, probably a little bit more than dividends, or pretty close to what my dividends are. So I like to look at it that way. I like to look at it as multiple income streams. I also almost look at every account that I have as a different income stream. So I look at each brokerage account and what it can produce. I look at each Fidelity retirement account that I have. I have a smaller Roth, but then I have a larger IRA. And I also like to keep track of how they're doing. And then finally, I like to keep track of how my taxable accounts are doing versus my retirement accounts. I do like to advise a lot of people who coach with me that you may be putting too much money in your retirement accounts. I've been able to do what I wanted to do since 2002. I've been able to start my own company, do the kind of work I want to do, work with the people I want to work with. And I would not have been able to do that if I had all my money in my retirement accounts. So if you're in your 40s, 50s, you might want to start putting more in your taxable and put less into your retirement accounts. So one thing I'd like to reiterate a number of times in these videos is patience and discipline. So now that we've hit new highs, you probably want to look at a lot of your positions, your puts especially. Can you close any of them? Any of them very profitable? And if you can, you might want to go ahead and close them. You also might want to consider a specific target for your profitability. Like you might say, well, if 70% profit I'm happy with, so if it's right around that, I'll go ahead and close it and then free up that capital for a different trade. I should be doing more of that. It's pretty clear that if you do that, if you close your positions at a specific profitability, you'll do better than just, waiting through expiration. So that's something I'm trying to do better with. And I've been able to earn a little bit more because of that. I close these last 2 months, I've closed more positions than I opened. So my overall count of open positions has come down. I believe when probably starting in July, it went from about 98 to like 92, and I think I'm around 86 currently. So, and I'd like to keep it lower than higher because I don't want to be doing this as kind of a full-time situation. I prefer to do fewer trades. I typically do 1 to 2 trades a day, usually probably one. Now I may have one where it's a new trade and then I close something else, and that works out really well. And then I also like to always mention price does matter. So it's not just finding a great company, but also paying the right price for it. What's its PE? How does its PE compare to its sector? I like to look at Seeking Alpha. It'll provide you some details along those lines. But you have to keep that in consideration. A lot of people are momentum players and they think, well, it's going to keep going up like Palantir. It's going to keep going up. It's going to keep going up. At some point, it does drift back to the mean. And I just don't want people to kind of get in trouble, owning it near the high, get away from buying high and selling low. You definitely want to find the right price for a stock, what makes a lot of sense. So I just kind of wanted to mention that to you guys. Now, next, I'm going to go over my trades and again how I did last month. And at the very end, I'll go into detail of, how much I have and how I'm doing on a monthly basis, not just overall, but by each account too. So stay tuned. I think it's going to be well worth your while. I've opened up my planning worksheet from August. Before we jump into the details, I do want to mention I have 3 memberships all 3 are growing quite nicely. I have a lot of activity, a lot of interaction, especially on my Discord, which is available to the 2 top tiers for my memberships. If you're interested, you might want to take a look. It's might be well worth your while. Also, I wanted to mention, please subscribe, hit that like button. So let's jump into it. So I provide this every month, and it keeps track of literally all my trades. Both for my Schwab account and all my Fidelity accounts. And I color code it. So this green means it's a new trade. This was Qualcomm that I did a trade on in my Fidelity IRA. A fairly profitable trade, 127%, but I brought in 297. The gray is when I roll. So I rolled Twillo, which is a cash secured put. And I've been rolling Twillo for a while, 62.50. I rolled it out to October 18th and brought in $186, which was like a 15% return. Then I did a covered call for Coca-Cola. I actually rolled 4 positions, 65, and I rolled out to 67.50, and I believe I went out about 6 months, but I brought in a fair amount of cash. Now, I'm using a $60 basis, so my actual basis is a lot lower. So this 3% for yearly ROI would be a lot higher for me, but I end up rolling my Coca-Cola around a lot. I haven't had any assigned in 3 or 4 years. And I'm actually trying to get some assigned currently because I could use the cash for the real estate project I'm working on. Then the blue is when something is closed. This was an Airbnb assignment. Occurred on 8/5, May 5th. And it was assigned at 140. And then I sold the 130s. And let's see. At the time, it was 128.33, and this is what I paid. So I kind of keep track and come up with a number, but this is a basis of what it got assigned to me and what premium I brought in from the different options, as well as selling the puts. So the original trade was 37%, but this trade currently is profitable, even though it's red. It doesn't mean you would have the brackets around it if it was negative, but it's now profitable. When it first happened, it was not profitable. But this was another indication. I felt like the price was okay, and I wanted to own Airbnb. Next is Mara. This is another Roth, or a roll in my Roth, a vertical put credit spread with a pretty slim spread. It's only got a $4 spread. And this one I brought in a lot of cash. I rolled it to, well, this should be October 18th. That's a typo. And I brought in 1184.16 for this roll. I did 249.16, and this is like a 90% yearly return. Then I did Corning roll. This was a covered call. I'm not going to go into detail about it. ACLS, which I rolled it out 110 to 95. At one point, I had spread the short and long puts to be able to roll. It got pretty deep in the money. It's moves quite a bit. It ends up in the money and then comes out of the money. But I believe it's currently in the money. But this time I brought in 290 in premium, 290.55. I have, since it's 1,500 spread or $15 spread, that's why the return is a bit lower. I'd be okay with owning ACLS. It's a chip maker primarily for electric vehicles, and their name for fame is reducing the cost related for running those chips, so making it more affordable for EVs and stuff. So Shopify, another roll. This was a covered call. I also had Shopify assigned, I think back in July probably, and it brings in a lot of premium. So I brought in 463 in premium, which was like 11% yearly return. So, I mean, I like to look at covered call. Premium is like dividend. So in a way, it's like Shopify pays a really good dividend. Now, I also did GCT, this a GigaCloud, and I rolled it at 25. And this is another scenario that kind of goes in and out of the money. Again, I put 1028, which was a mistake, but I brought in 1181.52 and and 297 for this trade. And this is just the 5,000 divided, minus the 297 to come up with the 32%. And then this is Broadcom. So I rolled it. This is because I rolled it more than once in August. So this one I marked as complete, since I made another entry for it in the spreadsheet, but this had a really good return. So 225, total premium is 488, 1774 is what the required capital is. So that's just 2,000 minus 225.52. And since it was such a short DTE, 18 days, I closed it early, or I rolled it early, is why it was so profitable. And then Chewy, another one I've done recently, I ended up closing it, I think this month. But this was probably my thinnest spread, 22.50, 24, nearly a 25 delta. 816 was expiration, and I rolled it. I believe I rolled it out to 920. Forgot to put that value in there. But one of my best, most profitable trades, 353%. And again, that's because of the shorter DTE. It was only 39 days. And then the smaller required capital, because it's 250 for each contract, times 4 minus 273. And that's how you come up with the 726. And I look to probably do more trades with Chewy. I feel like it's gotten a little pricey. It's right around 30 now. If it comes down a little bit, and I can do a trade around 25, I probably would. UPS, another assignment. It got assigned to me on 8/13. It was a 135, 125, and with it, I also had a small gain. Originally, it was a loss. Now it's a gain because UPS has come up quite a bit recently. And again, I sold the puts this was Fidelity. I had to call them and break up the puts, so it got assigned early, and then I called them. Actually, I called them before it got assigned because I knew it would be assigned, and had them break it into two different, the cash secured put and the long put, and then I sold the long put and brought in some cash. Next is Dell, and Dell's worked out pretty well too. It came really close to being assigned to me, and I rolled it into a cash secured put. So from a vertical put credit spread into a cash secured put, meaning another scenario like the one I was just talking about. I sold this 100 long, and then I lowered the short strike, I believe, to 105. Yeah, to 105, and brought in really good premium. Again, that also includes the premium from selling the puts, but it ended up being like a 29% return, which isn't bad. And then Paychecks, this is one I closed recently, or back on 8/13, and this was a very profitable trade. I need to do another one on them. I believe I closed it about 10 days or more than 10 days early. I think it was very, very profitable. This also relates to the UPS roll, then Tapestry. I also rolled it, and now it's out of the money. This is another scenario of be patient. It was pretty deep in the money at one point, and I believe it's out of the money currently, but I rolled it and brought in some pretty good premium, 287. Total premium, I brought in 885 with it, and it pays a really good dividend. I'd be fine with owning some of it. And then Zoom used to be my favorite trade. I don't do it trades with it as much, but it works out pretty well. So I covered call, I rolled 65, and I find this 65, 55 range is really good to do well with Zoom. So this was a delta of 286. It was 58.26 at the time. I rolled it to December 20th, kept the same strike, and brought in $357, which turned out to be like an 8% return. And again, in my mind, that's almost like a dividend. So Zoom pays a dividend, if you use covered calls. CF Industries, this one expired. One of the few that expired this month. Worked out very well for that trade. I believe it was, I can't remember what the profitability was, but if you're a member, you can actually look on Patreon. You can do a search for CF from the main page, and you'll see my actual post. That's what's really nice with Patreon. You can go back and look at all my trades. I'm going all the way back 3 years. And then here's Cisco, 2 contracts. This also expired, and it was a cash secured put. And same thing with Cisco. It got in the money, and I was patient, and it came back out of the money. Now I believe it's up in the low 50s. IJR, it also expired. So actually I had a fair number expire. And it was 103.95. And I believe I didn't pay. No, since it expired, you don't pay anything. And then Tesla, I did purchase a put. Back in August, I got fearful about Tesla. I didn't need to, but I did purchase a put at 120. And then I also did an iron condor in XLE, and it also expired. So most of my iron condors have expired. I think I've only had to manage one, and it might have been my Cisco iron condor. So both wings expired. You typically call it wings. And now another Coca-Cola roll, $70, and I kept it at 70, went out to 11/20/24. Brought in 209. This again using $60 a share. It's like a 7% return. I like using the $60 than my crazy low cost basis because it kind of messes things up. And we're now Airbnb, another roll for the covered call. Once I owned it, I started selling covered calls, and the covered calls pay really well at 547. It's like almost a 14% return. It was expiring in 10/28/24. So I've done really well with when things are assigned. I'm able to to do some pretty good covered calls. This is MetLife. I currently don't own any. I've done several trades, and they just seem to, I can either close them or they expire. This one I think I closed for cheap. Yeah, $21. And then another IYR that I also closed for cheap. Let's see what I closed it for. $10, $10.40. And then an XLE I rolled 85.75, rolled out to, or maybe that's the new one. Yeah, I don't know why I put roll in there, but I brought in some pretty good premium, 294.71. And this one was like a 45% return. I think I'm coming to the end of it. A target trade that I closed. This was 135, 125. I would have liked to have owned Target. That's another instance where, if it had gone in the money, maybe I shouldn't have rolled it and just let it. Well, this one I never did roll it. It just expired or closed. I was able to close it actually. Next is AMD. I've done well with AMD. It always seems to have pretty good premium. I did have to widen the spread from 140, 130 to 140, 125 to bring it a little bit lower. But here you can see I brought in 204 and 57 cents. And it's required capital. Because it's a $15 spread, so it's $3,000. And that makes the return a little bit lower, of course. And then I closed Home Depot, another trade I liked. If the Home Depot comes down a bit, I'll probably do another trade on it. And it also closed for cheap. And then more closing. I closed Tesla, I closed Zoom, I closed DVY. I also, another Zoom I closed, and then I did have a Schwab assignment. This was the only covered call signed away from me in a long time. And it was 3M. It was profitable, but not by much. One of those situations where it got too deep in the money in the call. They suddenly had good earnings and they popped big time. AMAT, this is Applied Materials, vertical put credit spread 175, 165. And it was a pretty profitable trade too, 317, so almost 130% with the 53-day DTE. I also did a new Google. I've started to trade Google quite a bit. This trade was 155, 145, 19 delta, and brought in 217. This was like an 86 for expiration in 52 days. Broadcom, I rolled it. This is also now currently pretty profitable. I'm actually trying to close it today. So this was a 20 delta. And I brought in 707 since I started making this trade. But this one was really profitable because I closed it literally after 9 days. So the original trade, that is. And then Coca-Cola. This was another covered call, 85. Brought in some pretty good premium. You can see I can bring in some dandy premium from Coca-Cola with leaps. Now my strategy with leaps on Coca-Cola, I brought in 514 for this particular two positions, is I know Coke typically will get near or will hit an all-time high, and then usually comes back, and I'm expecting it to come back into the mid to low 60s. I could be wrong. It might not happen, but at least that's what my thinking is. And then I did an NTAP, it's NetApp, and I did a vertical put credit spread, 115, 100. Again, another $15 spread, and I brought in 270 and around a 72% return. And then this is the App Lovin position. I closed it, and you can see I close them for cheap usually. It's not showing it there. Oh, maybe I rolled it. Roll closed. Oh, I did two trades on them, so that's why it's 259. I later closed it. So I later closed it for 1450, but that's what it looks like after the roll. Then I later closed it in the same month. So that's a little bit confusing, but that's how it's working. And then Dell I rolled, Amazon. Dell I rolled the 105 cash secured put that I had created earlier. It was 113 at the time and brought in some pretty good premium, 373 and another 23% return. So we're coming to the end of it. Sorry, guys. I know this went long. Amazon. So you can see I closed this one. I traded in a lot of companies I haven't traded in before. I like them at 150, 140. And I was able to, I believe, close them for pretty cheap. 16.90 if you look in the formula bar. So this was another one where I rolled it, but then I later closed it. So closed for 16.90, 21 days early. So that's why the return was so good. And then Nvidia was the last one. This was a covered call, and I like to roll this kind of all over. I sometimes will roll it, keep it on the same expiration, roll it up a couple dollars, roll it down a couple dollars. And you can make some pretty good premium with it. So this was 10.18. I rolled it to 11.15. And I brought in 222.65. Required capital, that's my cost basis. So literally it's like $6 a share. And this is a high return because my cost basis is so low. So, and the reason I don't do that with Coca-Cola is because I have a lot of shares with Coca-Cola. So I end up, and I plan to keep them forever and pass them to my son. So that's all the trades. Now, if we come down here, we can actually see. So I did 9 covered calls, 5 cash secured puts, 27 vertical put credit spreads. So mostly puts, only 9 covered calls. I did 1 iron condor for a total of 42 trades. Again, less than 2 a day, more like 1.2 a day or something like that. For premium, I brought in 88.14, and that even includes, does it include a loss up here? Yeah, a 538 for the assignments. And that's required capital. So all those trades, the required capital is 191. So this is like 4.61%. So if I was just doing trades and I didn't, I could potentially do that, but this is bridged across all my different accounts. So it's primarily the 4 different accounts that I trade in, which 2 at Fidelity and 2 at Schwab. The 2 at Schwab are taxable, and the 2 at Fidelity are retirement accounts. Now, if you look at my Schwab brokerages, I brought in 1141, which is a small amount. I primarily did covered calls, but it was like a 2.37 return. My Fidelity IRA, again, where I do most of my puts, it was much higher, like a 1.67% return, and that's based on about 470. This one's based on about 577,000. And then for my total premium, again, here's the same number. It's like 0.85%, and that's 1,300,000 or 1,037,000. And this is like a 10.2 just on premium. So remember, that's just on premium. So that's a substantial amount. If you can add 10% to your regular appreciation, it can be pretty substantial. Now, interest and dividends, let's widen this a little bit. I brought in 36.32, and that's about, I believe, almost 50-50 between interest and dividends. And then total income, so that includes premium, interest, and dividends from all the different accounts. I brought in 12,446 and 98 cents, so about 12,447, which equates to about 1.2%, which is 14.4% per year. And that doesn't, I could also include appreciation. It would make it a little bit more complex, but that's just for any kind of premium, interest, or dividends. And then daily income, if I divided it by 21, it's like bringing in 592.71 in income on a daily basis. Pretty substantial. So now, I talked about earlier in the video, I also shared with my membership the favorites. These are different favorites. I color code them. These are companies I like, but the ones that are yellow are kind of pricey. The ones that are green are a good price. The ones that are just white are a good company, a company I like, but they're neither overpriced or underpriced. Then I have trade rankings. This is something new I'm working on. I'm trying to identify, why certain trades don't work out and why others do. Here's the different checklists that I use for judging companies. And here's the guidelines. This is what I was talking about before. So I have them for both puts and calls. I talk about the deltas. I use different deltas for ETFs. I roll down in certain instances. I also look at earnings. And then I also set my goals, so this is something I keep track of. I need to update this for August. I need to add the 8,000. But you can see it's, other than May, and May was lower primarily because of lots of assignments. You can see I had Path, CVS, Zoom, Shop, and Walgreens assigned to me in that month, and part of the reason it was much lower is Walgreens has just been hammered, and CVS has also been hammered. And in July, I had no assignments. So that's what I wanted to show you guys. It's pretty detailed, but again, if you're a member, you can get access to all this and ask me even more questions. Or if you're a subscriber or you just want to leave a comment, please let me know what you think. Do you do something like this? Is this how you manage your trades? Also, do you set your goals like this? I'm just curious to how other people do it. So that's what I wanted to share with everyone. Thanks for taking the time to watch the video, and I look forward to seeing you next time.